Hey there. Well, judging by the share price down by over 6%, it's not looking good. A fourth quarter loss of $2.2 billion as a result of legal provisions and an impairment charge. And the Swiss lender has come under fire amid a whole host of scandals that's wreaked havoc at the lender. And it's also created significant dent in investor confidence as well. So this loss is significant and actually far greater than analysts were anticipating. And as a result of the turmoil, the bank has been trying to reduce its exposure to risk in order to stabilise the bank. But that's actually dented investment banking profits, and it's seen a decline in wealth management revenues, particularly in Asia, and its capital markets division as well saw revenues slump by nearly 50%. So all in all, not a good quarter for Credit Suisse. Hopefully, it will be looking to turn over a new leaf.
And you mentioned those scandals. There really have been a string of them, haven't there? Hugely damaging for investor confidence, as you mentioned, but also for the bank's reputation.
Yeah, so it's been scandal after scandal. In January, it issued a profit warning saying that it's going to be negatively impacted by this litigation. Recently, its former chair was forced to resign after breaking COVID rules. Ironically, he was brought in to clean up the bank's culture after the former CEO, Tian resigned amid an elongated spying scandal in 2020. And then on top of that, Credit Suisse has been embroiled in the implosion of Archegos, a $5.5 billion investment firm, and the collapse of Greensill Capital, which was a supply chain finance firm worth $10 billion. And you mentioned as well the Bulgarian money laundering scandal too. So it's really hard to keep up with the number of scandals that the bank is facing, and it really is in stark contrast to its local rival UBS, which appears to be going from strength to strength.
Well, compared to rivals like UBS, we have seen Credit Suisse falling behind. Do you think it can ever be a challenger again?
Well, UBS has been performing very well lately. It reported its best annual profit since the financial crisis in its latest financial results, and it's been carrying out share buyback program, and it's setting itself bigger and bigger goals. So it feels at the moment as though that gap between the two Zurich lenders is bigger than ever. But there is the potential for Credit Suisse to rebuild its reputation. There's no reason it can't become a credible threat once again. It's going to take time. It's not going to happen right away. So there's a lot of pressure on the new chairman, Axel Lehmann. He's looking to stick with his predecessor's strategy and really put all of those scandals to the past and focus on wealth management, where it's historically done very, very well.
So alongside rebuilding its reputation, what else can it be looking at to turn things around?
Well, I think it's going to be having to focus on its share price performance, really, because the shares have shed about 35% since the peak in February of last year over the last 12 months. And the stock has fallen to lows not seen since the start of the pandemic. And it's shed about half of its value since the highs in 2018. And there are sort of two ways that investors can look at this. Either we'll think, OK, it's at the low, the stock is looking cheap. If the management can turn things around successfully, there's a lot of potential upside here. Other investors might be saying the stock deserves to be this cheap, given these significant loss that we've seen in the latest quarter, the slowdown in revenues and the series of scandals as well, suggesting, it's not a worthy investment, and only time will tell. A lot of pressure on the management here. A lot needs to be done to get it back on track.